Claiming a dependent gives you valuable tax breaks when you file your return. First, the head of household filing status is for those who have a qualifying dependent and are unmarried. The qualifying dependent must live with you at least half the year, and you must have paid more than half the maintenance costs for the home where you and the dependent lived. Head of household filers get the benefit of a larger standard deduction than those who file single. The next tax break for filers claiming a dependent is the Earned Income Credit, or EIC. The EIC is for lower income working taxpayers, and it's refundable, meaning it can give you a refund even if you weren't due one. You can claim the EIC whether you're single or married and with or without dependent children. You just have to meet certain income requirements to qualify. Dependent children can increase your EIC amount so long as the child is younger than 19 at the end of the year, or 24 if a student. If the child is disabled, there is no age limit. Other dependents, like adult relatives or foster children, have no effect on the EIC. Dependent children increase the cap on claiming the EIC, meaning you can earn more money and still qualify. Having a dependent child affects the EIC in two ways: by letting you earn more and still qualify for the credit, and by increasing the amount of credit you get.